I want to give you a complete guide to LLC accounting. So if you have an LLC right now, you're listening to me, whether you have a single member LLC or a multi-member LLC, you want to watch this till the end because I'll be giving you a few tips and tricks as to how to structure your LLC accounting. And the first thing I want to say here is that, just kind of give you the overview of today's conversation. It's just that you need to know that every year in this country, between 25 to 30 million LLCs are operating. So that's a lot of LLCs, okay? And the cool thing here is that all those LLCs must operate, but they must also actually file tax returns every single year. So if you're one of them, you really want to make sure that you structure your accounting properly. So when we talk about LLC accounting, there are three things that we need to understand. LLCs has benefits, several benefits. The three most important of which are liability protection, taxation flexibility, and structural flexibility. So if you don't have the right LLC accounting processes, you are going to lose those benefits. Again, let me repeat: liability protection, taxation flexibility, and structural flexibility. So when we talk about liability protection, basically the legal structure of your LLC guarantees that your personal assets will not be at risk in the event of a lawsuit, business debt, or bankruptcy. In terms of taxation flexibility, you can choose whether you want to be taxed as an LLC or a corporation. If taxed as an LLC, you pay personal income taxes for your share of the business and can qualify for special tax deductions of up to 20% of your net business income. That's called QBI, qualified business income. And so if you are an LLC, you can choose to be taxed as a partnership. Basically, you are filing Form 1065. You can choose to be taxed as an S corporation. You can file Form 1120S, or you can choose to be taxed as a C corporation, in which case you file Form 1120. In terms of structural flexibility, your LLC can have as many owners, known as members, as you want it to have. Owners of an LLC can choose to manage the business themselves, hire an outside person to manage the company, or a combination of both. So it can be a member managed, a manager managed, or a combo of those those figures. So with flexibility and independence also comes responsibility, particularly when it comes to your LLC accounting. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So now let's talk about setting up your LLC accounting. So careful accounting helps you preserve the limited liability aspect of your LLC, while sloppy accounting puts your personal assets at risk, right? So some common pitfalls that can lead to a court determining you have failed to maintain limited liability include moving money around without documentation. So we're talking about you mingling or co-mingling your personal affairs with your business's affairs, your LLC affairs, and also failing to file the right forms with state and federal authorities. Those two elements are very important. So moving money around without documentation is something that really will automatically pierce the corporate veil. Piercing the corporate veil means that you are losing the limited liability aspect of your LLC. So also failing to file the right forms with state and federal authorities. So with federal authorities, we're talking about you predominantly having a conversation with the IRS. So actually filing your tax documents. With the state authorities, there is a constellation of papers that you need to file every year, including your annual report. You have to also file certain things around, like if you have to pay a franchise tax fee, you have to pay a state income tax fee, like state income taxes, all of those things. And also, I'm not even forgetting about your licenses and permits. Okay. So the first thing you want to do here is to set up your LLC accounting. You want to open separate business accounts. You want to open separate banking, checking, and credit card accounts in the name of your company using the tax ID number, so your EIN. Do not link those accounts with your personal transactions. So your LLC is a separate business entity, right? Both legally and financially. Yes, you can transfer money to your company from your personal account, and your LLC can pay you for your role as the owner or an employee. Not a problem. However, co-mingling assets opens you up to potential problems with the IRS, creditors, and courts. What does that mean? It means that do not buy your children birthday presents with your business credit card, and don't pay your LLC's phone bill with your personal credit card. Okay, you got to keep them separated. So when all your expenses are being paid with one business account or card, you are making it much easier to keep detailed records, okay? And clean records of your business expenses also help you take advantage of the small business tax deductions, the QBI that I just spoke about earlier, that you are entitled to as an LLC member. Boss, I want to quickly remind you of today's topic. We are having a conversation about LLC accounting, and I'm giving you a complete step-by-step guide. So the first thing is you want to open separate business accounts. The second thing is you need to actually decide on an accounting method. Now there are two accounting methods, accounting methods or accounting systems you can choose for your LLC. You have cash basis and you have accrual basis. Okay, so those two are the ones that are currently recognized in the United States, and accrual basis is the one that fits GAAP, U.S. GAAP. So United States generally accepted accounting principles. So what I'm trying to say is that you can use cash basis if you want to, but if you want to go a little higher, if you want to scale your business, if you want to attract investors, you will need to go to accrual basis. Okay. So what is cash basis versus the accrual basis? For cash basis accounting, you don't add cash to your books unless you have received the money, and you do not deduct any expenses until they are actually paid. Small businesses often prefer this method because of its simplicity. And then you have accrual basis accounting. So here you actually record your income and expenses when the transaction occurs, regardless of when the payment is actually sent. Okay, so this is kind of important. So let me give you an example here. Say you send an invoice to your client in April, but didn't receive the payment until June, for instance. You would, under this scenario, you would record this income in June if you're using the cash method, and in April if you're using the accrual method. So it is just it is just something you need to be aware of. But one thing for sure is that even though the cash accounting method is very simple, as I said before, if you start to scale, if you start to actually attract larger and larger, let's say institutional investors in your LLC, you're going to have to switch to accrual basis, because accrual basis accounting is the one that fits U.S. GAAP, United States accounting principles. And one thing, and also there's something called IFRS. So this is International Financial Reporting Standards. So this is basically the accounting rules that companies have to follow internationally. So if you are issuing financial statements to an international audience of investors, you're going to have to follow IFRS, because every country has their own GAAP. So here in the US, we use US GAAP. Maybe in France, you have a French GAAP. In Germany, you have a German GAAP, and so on and so forth. But bottom line is you want to make sure that you use an accounting method that is flexible and that works with you. The third thing you want to do after actually opening separate business accounts and deciding on an accounting method is to set up a general ledger for your LLC. So the general ledger is basically the accounting foundation of all businesses, LLCs included. So C corporations, LLCs, S corporations, partnerships, LPs, all those companies, they have a general ledger. Even nonprofits have a general ledger. Okay. So a general ledger is basically a record of all your business transactions broken up and categorized into 5 different accounts. So you have assets, liabilities, expenses, revenue, and equity. So when we talk about assets, we're talking about things that you own. Or we talk about liabilities, we're talking about things that you owe. We're talking about expenses and revenue. Those are pretty simple. Expenses are things that generate a cash outflow, and revenue is something that generates a cash inflow. And equity is basically the company's money. So equity, from an accounting perspective, the total accounting equation is assets equal liabilities plus equity, which means that equity equals assets minus liability. So basically, if you want to calculate the equity in your LLC, you just want to subtract the liabilities from the assets, and hopefully that number is positive, because if the number is negative, that means you're really in a bad situation. Okay, the general ledger holds all your business's crucial financial information and enables you to organize and manage it. So basically, without a general ledger, it's difficult, if not impossible, to balance your books, apply for loans, or prepare yourself for an audit. And I'm talking about all kinds of audits. The IRS might audit you. You can have an audit that a third party, such as a lender, has a commission. Because if you were to get credit, business credit, in some cases, the lender might want you to have what they call an unqualified audit report from an independent CPA firm. So think about that. So while general ledgers were once massive books full of handwritten financial records, most businesses have digitized the record keeping process using either spreadsheets or booking software like Wave, like QuickBooks, like Neat, like a Xero, like FreshBooks for financial document management. And it makes things a lot easier, by the way. And the good thing is having a comprehensive general ledger provides a picture of every financial transaction associated with your LLC. Also, I want to quickly remind you to this topic. We are having a conversation about LLC accounting. This is a deep dive into LLC accounting. Now, I want to talk to you a little bit about administering a new LLC. The thing is, when you are thinking about LLC accounting, you also have to pay attention to the administration of the LLC, right? Now, sales, marketing, and accounting all are key administrative areas for new LLC owners, known as members. So accounting is especially important to preserve limited liability, which protects personal assets from being seized to satisfy debts and obligations of the business. And LLCs are not taxed at the corporate level, which makes them a very beneficial choice for many small business owners. As I told you before, you do not have the double taxation aspect of things that you have with a C corporation. With an LLC or an S corporation, you have a single taxation. Okay, so you're taxed only at the owner level. And LLCs are also subject to fewer record-keeping requirements than corporations must follow. Certain states require the filing of an annual report, but others do not. So the thing is, before establishing an LLC, you should also seek the advice of a qualified tax professional who can explain how this entity is taxed at the state and federal levels. An LLC is treated as a pass-through, as I said earlier, is treated as a pass-through entity by default, which means what? Profits and losses are reported on each member's individual tax return, and many LLC owners will also be subject to self-employment tax. State LLC taxes vary by state, as well as by the type of business, because you can have a multi-member LLC, a single member LLC, also depending upon the kind of business the kind of sector you're in. Okay. And so when we talk about choosing, basically it's one of those things where you have to actually talk to someone so you can set up the right aspect for the right tax treatment for your LLC. And also when we talk about administering a new LLC, you also need to think about a chart of accounts. You got to really create a chart of accounts, including the 5 elements I spoke to you about: business expenses, revenue, assets, liability, and owner equity accounts. Okay, so you want to record all transactions, including received income, written checks, withdrawn equity, and added equity. And this is actually this is really kind of easy nowadays. You do not have to do things manually. You can just have accounting software such as QuickBooks online, or you can have Xero, as I said before, Xero, Wave. You can have FreshBooks. All those accounting software tools will help you actually satisfy the accounting equation, which I talked about earlier. Total assets equal total liabilities plus total equity. Okay, so this is what it is. Let me talk to you about how LLCs pay taxes, and I really want to dig a little deeper here. Along with setting up your LLC accounting, you need to decide how you want to be taxed, right? If you know what to do it yourself. If not, just enlist the help of a trusted CPA or EA, enrolled agent, or tax attorney to kind of help you out. Now, there are 3 ways, and only 3 ways, the IRS can treat your LLC income over time, okay? First of all, if you are a single member LLC. So if you happen to be the only owner of your LLC, the IRS will tax your business as a sole proprietorship, meaning you as a sole proprietor. will pay taxes for your LLC on your personal 1040 tax return. And everything happens in your Schedule C. So in this regard, the IRS is treating your LLC as a disregarded entity. So your LLC is seen by the IRS as a disregarded entity. And basically, as an LLC owner, you also have to attach a Schedule C for reporting business income and a Schedule SC for paying self-employment tax. So that's what happens for a single member LLC. What about a multi-member LLC? Well, things can be a little complicated depending upon the structure of the LLC. So if your LLC has multiple owners or members, the IRS will treat it as a partnership. So each owner must pay taxes on his or her personal income tax returns based on the profit share he or she owns in the LLC. You also have to attach a Schedule E to your 1040 form, basically, which is used to report income for partnerships. Okay, so your LLC operating agreements should clearly state the percentage of shares that each LLC member owns. So we're talking here about profit distributions or just distributions in general. Okay, and even though the LLC doesn't pay taxes at a corporate as a corporate entity, it still needs to file Form 1065 because Form 1065 is actually an informational return that the IRS uses to double check what the LLC members are filing with the agency. So the partnership files this form to show the IRS that all LLC members are reporting their income and losses correctly. And the LLC must also file a Schedule K1 that breaks down every member's share percentage. So everything is clear for everybody involved in the transaction. So when we talk about how LLCs pay taxes, an LLC can pay tax as a single member LLC, as a multi-member LLC, or as a corporation. Okay. So basically, what happened here is that any LLC can choose to be treated like a corporation for tax purposes by filing Form 8832 and basically checking the corporate tax treatment box. And so let's say if you are in a higher tax bracket and paying more than 30% of your personal income, choosing to be taxed as a corporation could save you money. And the IRS taxes all regular corporations, C corporation, at a flat 21% rate. However, LLCs with multiple owners that decide to go this route are essentially taxed twice. The LLC pays the 21% corporate tax, and each shareholder pays income tax on their dividends at capital gains rates, which can also be 20+%. And so the thing here is that if you want to have more information, it's just better to reach out to the IRS, because the IRS website is always the best place to find the latest and most detailed information regarding LLC taxation. So the bottom line is what? The bottom line here is that you need to really simplify your LLC accounting. Okay. And the best way to simplify that is to have the right bookkeeping software. Don't try to really become a CPA or go and get a PhD in accounting. No, you just want to run your LLC. And basically nowadays, having the right accounting software is really, that can really go a long way towards simplifying things for you. So, software tools such as, Neat, Wave, Xero, FreshBooks, Zoho Books, QuickBooks are all good. Even Sage Accounting. They're all good in trying to help your LLC simplify its accounting structure. And the bottom line here is, before you choose an accounting software tool, make sure that it really integrates really well with your existing tech stack. Because if you have a new software tool that doesn't integrate with your existing tech stack, it could be really, really problematic, because you're going to have to open many windows to be able to actually just record a transaction or even print a financial report. So just make sure that those software tools that you're using right now versus the one that you're getting, they can talk to each other. That's what integrations mean. They can talk to each other. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just giving you a complete guide to LLC accounting. So I explained to you how to set up your LLC accounting. So opening a separate business account, deciding on the accounting method to use, setting up a general ledger, administering your LLC, and also paying taxes. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.